Hello guys, I got a question and he says why day traders they sell short if all the people they go long the market will be better. Okay, as if selling short is not ethical or something. Understand that selling short is a characteristic of the stock market. You don't find selling short in other businesses. Stock market is the only, like a stock market. When you say stock market, I'm not speaking just stock market. I'm speaking about currencies, options, and futures, and even bonds. All this stuff you do selling short, and this is part of the game. A lot of people make more money selling short than going long. They are not interested to go long, okay? Because most of the time, selling short is quicker in making profits than going long, okay? And you can see, for example, when there is the correction about 5 days or 7 days, these days are so bad that it takes 1.5 months or 2 months from a stock to go up, and then in a few days it goes down to the same price as before. So you see that selling short is can make a lot of money for day traders. Now, there is no something ethical about selling short because it was done from the beginning of the stock market. So it is part of it. Investors, they know only one way, is to go long. But understand that the market is not always going long. There are some stocks that go down each day. Okay? So why not selling short? Because in the market, you should not love the company that you are in. Like an investor, you love companies. For example, for many years, they give you money. But some years, which are bad years, like the crisis of 2008, almost all the stocks, most of them, lost 50% of its value. A stock that it is 100, it goes to 50. It goes to 40, to 20. Okay? So the people, they find a way to make money, and those people who short the stocks will make more money than the investors. And the investors, those days, they will have to lose a lot of money. Okay? So, why to sell short? It's just because of the opportunities in the market. A company that has bad news and you see that the stock is going down daily. The stock was 100, now it is 20. Okay? So people, they either sell short like with a position, taking a position, but this is very dangerous. Don't do it as a day trader or as a swing trader. Don't do it, because this is done by hedge funds and mutual funds. No, not mutual funds, hedge funds. But understand, this is something very, very dangerous, okay, for small day traders or swing traders. So the most important thing for selling short is there are more opportunities in a troubled market, like the market we are now. From February 2018 to now, we are at the end of October. All this was a good time to sell short stocks. Right now, this week's 2 weeks, 3 weeks, 5 weeks, a lot of stocks in Russell 2000, in Dow Jones, in the other one, in S&P 500, you see them collapsing, going down so bad. So if you want to be a day trader and you want to sell short in the morning, just find if the whole market is going down, you can just try. Okay? So selling short is part of the game. Don't be scared to sell short. Because if you just go long, let's say there are just a few stocks that go long, that go up. Are you going to follow few stocks going up and leave the majority going down? Here, the probability of making money is very, very, very little. That's why some people, they try to specialize in day trading. They don't do swing trading. They don't do investing at all. They make their money daily. This, as I told you before, you need practice. There is no what we call a technique that it is a magical technique you do for everything. No, there are techniques. Stocks go up and go down every day. So if you know these techniques and you begin to practice, it's very good. Now, if you are going to make rules, to make techniques by yourself, understand that it is not easy. You will spend a long, long time. If you are doing this without money, it's okay. You take 3 months, 6 months, 1 year, and you always do some stuff. You have the same techniques, you use them, and you go with them. And after 3 months, 6 months, 1 year, you will see if you are making money with these techniques. It means your techniques work. Then you go to practicing with a little money, and then you see, are your techniques working? Because when you are in virtual, you don't feel the money. If you buy a stock and it's going down and you don't exit, and you wait and you wait and you wait, if it is real money, you will feel you are scared. It's money that is going from you. Okay? But if it is virtual, virtual, it means you make 1 million or you lose 1 million. It doesn't, it's not a big deal because it is just virtual. But when you begin to practice in real, that is the thing, because your feelings, you are scared. You are scared to lose money, or when you make a little money, you are very, very happy. So feelings are going into your business. And it's very alarming. So in order to take all these feelings, you should have specific techniques you should use daily. And then after a few months or 1 year or 2 or 3, if everything is fine and you can make money, it means that your techniques work. Either it is your techniques or someone techniques or training techniques, it doesn't matter. The main thing is to make money. Whatever is the technique, whatever you bring this technique, this is the thing. Now, selling short, you should be careful. Okay? Especially with the small stocks. Small stocks are moved very quick and they are manipulated. Understand that penny stocks, or usually stocks $5, $4, even $7, $10, they are moved quickly. It means anyone can move them. Someone who has money, the volume is not good, is small, anyone can move them. And when they move, it doesn't mean you stay 1 hour and then they move little by little. No, it can, by seconds, it can move up or down so much. So it's better if you are going to practice on stocks that are bigger, $20, $30, $40. At least there is no a big play of manipulators. So manipulations are less. I know a lot of people, they like penny stocks, and because they see the chart and they see, oh, the stock $1, it goes to $5. Why I am not there? But then he see a candlestick from $5, it is $1. And he say, oh, it goes the whole day, the whole day. But try to see, is it the whole day or is it 1 second? Because maybe someone sell short 10,000, 20,000, 50,000 shares at one time. So the stock will collapse. From 5, it goes to $1. So understand, when you see candlesticks in penny stocks, you should see them by time frame of 5 minutes or 10 minutes. See how long does the stock it take to go from one price to another price. If it is manipulation, like a pump and dump scheme stocks, understand that it's so hard. These stocks are very manipulated, and you can lose all your money in those stocks. So whenever, if you like this kind of stocks, manipulated stocks or pump and dump scheme stocks, put just little money. Don't put too much, especially in selling short. These stocks are very, very, very dangerous. Understand that. If you get caught, if you sell short a stock that it is $5, you think it's going down, and then in few minutes it's going to $10 or $20, understand that you lose all your money, and maybe the broker will call you and he will ask you for more money. So be careful of not playing with penny stocks in selling short. Okay? So this is just almost for the beginners, because the people who have experience 1 year, 2 years, 3 years, 4 years, they understand how much it is difficult, how much it is risky, so they don't put that much money. Okay? So in general, if you become good at selling short, you just follow stocks if they have bad news. If there is a national news that it is too bad, you just go to the stock market. If it's falling, you just sell short some stocks. This is how the people make money. It means by news, by having bad news in the market or in the industry, or in earning news, it's too bad and you see the stock collapse. So this is the way to make money from selling short. Okay? Or you can specialize in a few stocks or in one stock. Each day, if it's going up, you go long. 2 days, 3 days, it's going up, you make money. If 1 day it goes down, you sell short the stock. Now, how do you know this? It's just by following, practicing, making techniques, making rules, and you should have a good command of risk. In any trade, you should think about risk. Don't think about how much money you make, because you will never know. When, for example, someone who asks you, oh, stop at 5% or 10%, 20%, you will never know. These people, they are not in the market. They don't understand how the stocks move. So don't be limited. I see some stocks that they go down 10%, 20%, 30% a day. Okay? It's just because bad news and there is a lot of short sellers. That's it. So don't stop yourself from getting profits. But whenever you want to exit and you see a lot of profits, you just exit without waiting more and more. Okay? So selling short is the same as going long. It is, if you are a day trader, you should know how to sell short, and it is something very, very important. If you are a day trader and you don't sell short, this is not going to work for you. Right now, almost all the stocks are going down. What you can do? You will never trade. You will wait until the whole market become good and all stocks will become good. So that's why day traders, you should not think about trends in the market. It's not important, the trends. Trends are for swing traders. You should think about the day. Is it up or down? Up you make money, down you make money. So you are free always. Your hands are free. Whatever happens to the stock, you are with it. You follow the small trend in the day, up or down. And you can, if you want just to practice, you can just go in the morning, have the chart. For example, you can use my chart, and there is a training also how to set up the chart like mine. And you can just in the morning, before 9:30, you take any stock and you look, what does it do? Okay? You practice, you look, and then you can see some rules. You can make some techniques or some rules about you. If you don't know, you can check my golden subscription. We have two training. They are for free. You can watch how to sell short, how to go long, and that's it. Okay? So if you are becoming, or you want to become a day trader, you should think always about going long and selling short. This is primordial. It means very, very important for you, and it needs practice, and it needs a lot of patience until you get on your feet and you understand how stocks work, and then it will be a piece of cake. Because whenever you know how to handle stocks, that's it. If you have techniques to know if the day is up or down, that is what you need to become a day trader. You don't need anything else. Just this, up or down, small trend in the day. That's it. Okay? So thank you very much, and see you next video.